This is Become Rich Project, day number 26, diary entry number 12. Sate. Let's start by logging into ComSec. Checking the current portfolio. Not too concerned about that. Holdings and shares. For the inexperienced, this looks pretty dire. But for the experienced person, these up and down, rise and fall of share prices is nothing new. Let's have a look at what's on stake. Portfolio. From last night's trading, it looks like I've lost $5.58. But that doesn't concern me too much. Actually, there's a good lesson to be learned here. These are my current holdings. One investment gained $2.40 and the other one lost $7.98. However, and this is a good lesson learned, if we were day trading, yes, this would be bad. But I'm not a day trader. I have the whole week to ensure that I make money from my investments. So this Ecolab, if we have a look, Ecolab opened at $199.92, high of $200.22 and low of $195.86. The disparity between the high and low is roughly about $5. That's $5 per share. So for the inexperienced, especially those not trading in the US market, this is not something new. And that's how many people can profit in the US a lot better than in places like the ASX. NYSE and NASDAQ would have these types of companies like Ecolab, which would trade with a big disparity in terms of what's high and low. So just for that one day, it is possible to gain $5 per share. Now, my investment started at $200 and my expectation and forecast is that Ecolab shares will increase in value by the end of the week. My forecast is an increase in value because the ex-dividend date for Ecolab is Monday the 16th of September. My consumer confidence is that Ecolab would be trading above $200 per share, at least sometime before Monday the 16th of September. Which brings me to Children's Place Inc. Last night, before it started trading, I put a buy order for $88. Now, unfortunately, Children's Place Inc. only went down to $88.04, so my buy order of $88 didn't get triggered. However, should I have placed that just 4 cents more? Maybe let's assume I placed it instead, in hindsight, at $8.50. The market closed with Children's Place Inc. at $92.15. $92.15 minus $88.50 equals $3.65. I would have been able to purchase roughly about 9 shares, so that would equate to a profit of $32.85. That profit would have been made in one day. Now that's a pretty big profit to be made in one day. So the lesson there is to trust the research that you do and to have the confidence, that's why they call it consumer confidence, that the purchase you make and at the time you choose to make it is the right choice. So let's put that buy order again for Children's Place Inc. because I believe that it would increase further. However, I think it will drop a little bit more before it increases sometime later in the week. In stake, I've already got it in my watch list. My forecast is $88.50. If we go in advance, 9 shares, $88.50. Is that right? So I'm gonna buy Children's Place Inc. at $88.10 and 9 shares. Submit order and wish for the best. Buy order placed. So I'm gonna be updating the workbook now with $88.10. Schedule placed today. What time is it in New York? It's 6:04 a.m. in New York right now, so I'm gonna be placing that. We bought 9 shares. There's 0 brokerage fee. With a bit of luck, the purchase will be triggered at $88.10, and by the end of the week, hopefully we can sell off at $92 per share. That will give me a 4.43% gross margin, which equates to $35.10. Now for the exciting stuff, compound interest. Instead of using any of those apps in terms of compound interest or downloading something from the internet, I thought I'd create it myself. Starting from $1,000 with 3% on a weekly basis and a monthly deposit of $500, we're talking USD here, what would it be like in 52 weeks, which is 1 year from now? So starting from $1,000, 3% of that is $30. End of the week, an assumption that I will have $1,030. The second week, 30% of that is $30.90. By the end of that second week would be $1,060.90, etc. If we scroll down to 52 weeks, the end outcome is $18,695.23. That's USD. So that's a pretty light type of calculation. I would obviously need to make more than 3% per week if possible, if to achieve the target of 50K in 1 to 2 years time. The reason why I don't use, I downloaded some apps in terms of compound interest and I've looked in the internet, but nothing really is as accurate as I want it to be. And that's why I created this myself. Because one that you create yourself is one that is more accurate to what you're trying to achieve. And it's pretty easy. It doesn't take that long. This probably only took me about 10 minutes. If we look back on the ASX shares and investment made, it might seem dire that so far my investment is making a loss. The reason why I'm not nervous or I'm not concerned about that is because I treat this as a savings account. I know, as a matter of fact, that Telstra and Midway Limited won't be going bust before the end of the year. They won't be going bust in the next 5 years either. They are fairly good companies to invest in. They are safe. For me, instead of putting my $1,000 in a savings account and earning 2% for that whole year, I'd rather put it in shares and gain that 2% in less time than that. And that can also be achieved by dividend payouts. Now, the benefit when it comes to trading in the US instead of ASX, we know that $92 is possible. We know that it's also possible for the shares of Children's Place Inc. to sell at $88. Within this week, it is possible, if not just within 1 day, to achieve the $30 margin I need per the plan in the compound interest calculation. It is possible to increase that by increasing the number of shares I purchase. And one of the reasons why this is more possible is because of platforms like Stake, which allows people like myself in Australia to purchase shares without much brokerage fees. I invested in these 3 companies, minimizing my risk, having that confidence that these 3 companies would not be going bankrupt in the next year, 3 years, or maybe even 5 years, I don't know. I didn't research them that much to know what they would be like in 5 years' time. But they're pretty stable companies. That's what makes them a safe investment. Especially if my investment would only last 1 week or 2 weeks, a month even. Another reason why when I purchase shares in these companies at the time, my research indicates that it is undervalued. I would be able to sell the shares in these companies at a higher price at a later date. But my strategy means that I would need to sell it at a higher price no later than the ex-dividend date. Because from experience, I know that share prices will decrease in value because the company will decrease in value on the ex-dividend date. This is the time when they use a lot of money to pay off their shareholders. So obviously the value of the company will go down because they're spending money. By the way, in terms of tools, Finviz is actually quite good. However, because I'm in Australia and I have a CommSec account and Stake doesn't provide that type of service. Stake is just a platform for Australians like myself to be able to purchase shares. If you have the ability to purchase shares in Nasdaq and NYSE, I would highly recommend it. But do find a platform that's right for you wherever you are in the world in order to be well informed before making purchases. For myself, the platform that I'm using mostly is through my own personal bank, which is Commonwealth Bank of Australia. And the platform is pretty good. It provides a lot of services that it doesn't provide anywhere else, and for free. And that's really another important factor there. It's free. So let's go through the summary of what we've done today. Diary number 11 summary. I managed to purchase shares on a 3rd US company. Number 2, I explained the rise and fall of share prices and why it's okay. And 3rd, completion of a compound savings schedule in the workbook, which is pretty helpful. That's it. Short and sweet. See you next time. Bye.